Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex Weekly Charts and Analysis. It is March 8th. We are rolling through the year so far. It's amazing to think that we're March already, but man, every time I see that up there, it's like, wow, we're just cruising. I guess time flies when you're having fun. Obviously, I have little ones, so everything goes twice as fast for me. But thank you for attending today. I know we have some new people on. It looks like, and we have some definitely some returners as well. We're going to dive right into things because there's a lot kind of to talk about. Not really any economic news events today, but there's some headlines that definitely have been kind of moving and bouncing the market. And I want to make sure we can get into a little bit extra bit of education today than we normally do. So, with that said, let's cover the Nadex risk disclaimer before we start. Whoops. There we go. Oh, man. The mouse is all bouncy today. Trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost of the transaction, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility, and you trade them at your own risk. None of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is no longer a registered trademark of the IG Group. It is actually of, I believe, Crypto.com is the correct ownership. So I can change that right there. And it wouldn't be limited. I'm sure they have a name or something like that. And let's change this to 2022. There we go. Now we are fully updated and I guess still within compliance. So there we go. I've changed it on my slide, but it takes a little while to kind of come across. And that's it. You guys have seen it. So for the new people that are here, you may say, okay, well, who are you? Why are you talking? What do you do here? So I'm not an Nadex employee. I'm actually the president and CEO of Keep Trading Simple. I've been partnered with Nadex now for, I think, about 4 years. I've done articles for them, education summits, and then analysis sessions. And every week what we do is we do a weekly breakdown and kind of see where the hot topics are for the week. Normally, I would say under normal circumstances, our main focus is kind of how do we trade the economic news events out there. Obviously, we don't have war every day. It's not a normal occurrence. So, when there's war headlines, geopolitical events, they typically tend to kind of trump all. But we'll do the best we can and kind of see where the opportunities are for the week. Now, I started trading back in 1999. I can say I'm a Y2K trader. I got in at the perfect time, right for the markets to crash. So I learned a lot very, very fast. I started with stocks and traditional options, and that's where my background originally started. About 6 years in, I found foreign currencies, the forex market, and absolutely fell in love with that market. I just love the global nature of it. I love the fact that it was truly 24 hours a day that I could trade it, and I love the idea of leverage because obviously when you're younger, you tend to have time and a lot of ambition, but you don't have a lot of resources. So, when I was first starting fresh out of college, it was again, finding leverage was a great thing for me. I did become a financial advisor. I did work for one of the big three banks. Spent some time there, learned really about bonds and kind of what the kind of like the what I would say is the hidden kind of back end kind of systems in the market that most people never ever learn about. So I was very thankful for that. But only stayed there a short time and actually left to go out and actually teach people how to do it themselves. I did, and I can say that I have worked on Wall Street. The apartment that I lived in was actually 2 blocks, not even really 2 blocks. I literally could throw a baseball because it was downhill for me. I could literally throw a baseball and hit the New York Stock Exchange. I actually walked past it every morning that I was up there working. And if I looked out of my office, I could see the bull. So it was kind of cool. I got to see the bull, see all the people. I'm just constantly, it could be like pouring rain and there'd be a line of people waiting to take their, photo with the brass bull. And now there's the little girl out there too. But that wasn't actually, I think that came in right when I was leaving. Um, so I have traveled through the United States and Canada. So I've actually had some exposure to the Canadian market as well, which is pretty interesting. A little bit different of a flavor on things, but it's interesting to see how they look at the US market versus what we do. I am a dad. You guys know that picture's old. I need to get another one. But with COVID, we haven't gotten family pictures. With the little one. The closest thing we got to a family picture was Christmas photos, and it turned out one of the kids had COVID for that one. So that poor guy dressed up as Santa, I hope he got like triple hazard pay for that one because we already had COVID when we got there, but God knows how many other people had it for that guy. So props to him. But yeah, so I don't have the baby today. Sometimes you'll hear him on stream, but not today. With that said, let's go right in and cover the agenda. What we're going to do first is look at upcoming news events. When I say upcoming news events, I mean economic news events. We're going to look at the calendar and kind of see where the biggest headlines are for the week. Unfortunately, Unfortunately, I can't do much more than that. I don't know when the next stage of the war or whatever is going to drop with Putin. Who the heck knows? Um, so can't predict that. So I don't have any inside information. I'm not part of his secret cabinet. I'm not an oligarch. I don't have $600 billion in yachts that I'm trying to keep from getting seized right now. Um, After we go through the events, I'll say the not predictable, but the ones where we know they're going to happen. We'll cover indices, see where they're moving for the day. We'll cover forex, and we will cover commodities and look to kind of see where the potential setups are. Obviously, commodities is a very very hot topic. I'll mention it. A lot of the headlines this morning are for oil, so oil will kind of get factored in. The oil market right now, and I'm going to say before we really begin, the oil market has always really been the wild wild west. What we're dealing with right now is it's one of these things that probably in my generation, it's probably the last checkbox. I don't know that I'll ever. I mean, hopefully I'll never see something like this again. It was strange that when I say a little while ago, it's not wasn't last week. Oil was actually at $0, and now we're up to where we are. It's kind of crazy. Um, Todd and I were joking around. He's my co-host for the morning program. We're joking around that Putin single-handedly has done more for climate change than any of the Paris Accords or anything else out there, any other movement has done. Because the reliance upon oil, this is really driving people to look at basically how are we self-reliant upon energy? So it's amazing. Again, we can't get rid of oil, and we're producing more of it than we ever can. But it's putting such a negative light and so much negativity or toxicity or whatever word you want to use for it around just oil and oil prices. Um, Again, this morning they were talking about with prices where they are right now. Anybody that owns a car, it's going to cost them an extra $2,000 this year to put gas in their car. So that's a big deal. Large economic implications from that, as well as political. People vote with their wallet. Seeing it go the way that it is. A lot of people feel that enough wasn't done early on. And it's kind of the same argument you could have with the Fed right now, with interest rates allowing inflation to get as high as it is. So um, yeah. So with that said, let's go across and let's go right into let's talk about kind of where we are in the markets. So in comparison to where we started off earlier today, as you guys know, I mentioned that we do a morning show every day, 8:45 to 9 a.m. Todd and I broadcast on YouTube, on Natix's YouTube page. A lot of times I will try to co-broadcast it. It pops up on my channel as well. But we talked about how the currency market had some very, very big movers. A lot of that has actually stabilized and kind of evened out. And if you're looking at it right now, and again, the reason I start with this currency piece here is because, again, this is kind of the global economy. A lot of talk about right now, and when we talk about global economies, obviously everybody is really kind of putting sanctions and trying to block Russia out from a global economy. But understand that there's so many things that are interrelated. I mean, Russia's biggest benefit right now is they're sitting on a huge stockpile of U.S. dollars. So we can block them from from making transactions, but they still got a lot of U.S. dollars, kind of their war chest they're using to stabilize their country. So everything we do is connected this day and age. So right now, everything is basically flat. Something like the pound yen, right? That has a daily ATR of like 130, 140. It's moved 13 pips in 24 hours. Okay, that's basically nothing. You're seeing that the euro pound is starting to move. You're seeing the dollar CAD is up 101, which is absolutely insane because that is dollar strength CAD weakness. And what are we seeing? We're seeing oil rally, which is also one of those factors that typically is a CAD strength because they produce 400 and what is it, 4.5 million barrels is what they produce every single day. All right, they produce a lot of oil. So it's odd that we haven't seen that strength come back in yet. It's interesting because eventually, when they start seeing the numbers, it's going to be insane. I can tell you this morning when they were talking about the $2,000 thing, one of the things they mentioned was that they're talking about maybe the oil companies obviously are going to make so much money right now. They're talking about how do they put precautions in, and you're like do we add a special tax right now to these oil companies because they're just going to make so much money. I mean, 2008 they made more money than they ever made, and right now they're going to make even more. They were talking about adding some type of limiter or something on the oil companies. Like the big question is, are they going to reinvest this? Are they going to keep it as pure profit? Are they going to do buybacks? To use the cash that they have, all this massive amounts of cash. Um, or they invested. I mean, all oil companies, just so you guys know, all oil companies are invested in other things besides oil, in other technologies, because basically, as the future comes and we rely less upon oil, these companies still have the kind of requirement to provide profits to shareholders. And if we're not using oil, they are energy companies now, not necessarily petroleum companies. So, question is, what are they going to do with it? But they're already saying that they're going to have massive amounts of money because of oil the way that it is. Now, headlines today, we really didn't have any economic news events. We have 5:15. We have Governor Lowe speaking. He is the Australian version of Powell, right? And he's speaking at a financial review business summit. Okay. Aussie right now is down about 55. We're seeing dollar strength come in. We're seeing it rally back a little bit. The Australian dollar right now is typically a proxy for gold, and we're not seeing it kind of follow the same ways. The news today that we've seen, actually, here's a new one that just came through. Looks like it's a nice little article talking about what inflation is going to do. 5 ways the Fed and higher interest rates may impact you. Could be very interesting if you guys are unfamiliar with what a rising interest rate environment looks like. But we're seeing headlines like this that, Biden says, that's it, we're going to ban Russian oil. Okay. Now, for lack of a better word, this is basically just a political comment. This is just a chest thumper statement. The United States only uses about 90,000 barrels a day from Russia. It is like a teardrop, right? We import and use 4 million barrels from Canada every day. We use 90,000 of Russia. So, is this really such a huge deal? Not really. But seeing the headline, people are like, that's it, we're cutting them off. They're so important. And he says, we've consulted with allies. Biden says, we understand many allies may not be able to join us. It's just because of the proximity of where we're getting it from. They're not in close proximity. We don't use them. We produce enough. We get the rest from our allies in the Middle East. Other people not in the same scenario, saying that's it, we're doing it. This is more just for headline. We remain committed to putting pressure on Putin. Our 90,000 barrels is putting absolutely zero pressure. To stay this is just for political kind of posturing. 90,000 barrels is not a big deal. Someone would gladly pick that up, right? But he did tell us that gasoline prices will go up further from this in the future. That's kind of oh my God, look at this. We're doing a good thing, but hey, your gas prices are going to go up. 90,000 is not really a big deal. That's, you know, when we talk about weekly surpluses, it's typically the difference is less than 90,000. And then again, he's saying that we must accelerate to clean energy. I wouldn't say it's necessarily clean energy. It's just other energy besides gas, but it's easy to say gas is dirty and everything else in the world is clean. It's not. Again, some of this is also political kind of posturing with things. Understand, even what everybody would assume is the cleanest, right? When I say cleanest, I don't mean solar. Everybody thinks solar is clean, but we need to get special metals for that. The cleanest and most simplest form of clean energy is wind turbines. The problem with wind turbines is they don't last forever. And then we have massive, huge, if you guys don't know what I'm talking about, again, the blades are recycled after so many years because they're destroyed. And guess what? They're really environmentally unfriendly. So, yeah, it's kind of one of those things. I don't know. Anyway, that's where the big headline is coming from this morning. This is why oil is rising. A lot of people don't understand the true impact of it. Another big statement is this one right here, that the EU aims to cut Russian gas dependencies by 65%. Now, this is actually a huge number. Basically saying we don't want to rely upon Russia. What's interesting about it, though, is it says, hey, we're going to cut 2/3 of it out by the end of the year. Take that, Russia. And then, most likely we'll try to end it all before 2030. So they're going to get rid of 65%, but then it's going to take them another 8 years to get rid of the rest of it. A lot can happen in 8 years. A lot of technologies. So it's kind of like, I don't know. It's good that that's what the commission says, but remember, I mean, every time these commissions say things, the true reality is it going to get there. So, I mean, I think naturally this is probably what would have happened anyway. Maybe, and again, they're talking about starting with gas, right? But they can't, when they say gas, they mean like natural gas, things like that. So, are they able to cut right away? No. Was this coming? Yeah, probably. So that is actually bigger news. Besides that, that's it. I mean, the only other headline we saw today earlier, 10 hours ago, South Korea shot at a North Korea patrol vessel. We haven't heard anything else in 10 hours. He's probably lost. No big deal. And then obviously China is trying to play peacemaker. That's it. That's it. We got nothing else there, right? A lot of the headlines these days is it's just kind of what's the next step? What's the next step? Shell made some notices, they're donating some profits back that they needed to take. And that's it, I wish to say that there was a lot more out there, a lot more going on, but the reality is there's not. Um, I guess one of the other headlines is that you're every morning it's, oh, we shot down 2 Russian jets today, showing that the Ukrainian missile, the Ukrainian anti-defense system is still there. It's like, well, what do you consider the anti-defense? Do you mean the missile that the guy has on his shoulder that he runs around with? Is that their air defense? Eh. So again, there's you know the support that we've given these countries has made them extremely mobile. I don't know if I consider that my defense system, the one guy running around, but hey, it is what it is. It's a headline. So the rest of the week, okay, you can see earlier this week it was basically anemic. There was nothing. Starting tomorrow, we have crude oil inventories. Um, we'll see. Last week it was a down draw a little bit. A minus 1.1 million down draw is absolutely nothing. I just want to bring this in the context when we talk about what's happened for the last year. 1.1, you can say, I mean, gas prices are like all-time highs almost, right? For a lot of us, the way that we feel right now. And it's not like our down draw on our inventories right now is like minus 18 million barrels. We're not running out of gas. In fact, the last, February started off with two big surpluses and then down draws. You can see that minus 1.1 is basically nothing, right? Here's a minus 4.8, a minus 1, a plus 2.4, plus zero point 0.5, a minus, you can see that things are worse back in December before Putin even invaded, right? And then again, we have some big surpluses back here in the October timeframe. September, right? Plus 4.6, plus 2.3, plus 6.1, right? September, everybody went back to school. So a 1.1, we're not really running out of gas. So again, the prices are kind of more speculation of anything else. We'll give us some interesting play tomorrow morning, though. Thursday's a big day. We have some monetary policy statements and financing. Nothing is expected to change in the European Union. There was actually supposed to be a rate hike. Okay, when I say supposed, it was kind of forecasted. Inflation wasn't quite as bad, and again, I think for a while they've been watching this scenario, the situation in the Ukraine, and they've been like, well, maybe we'll hold off just a little bit more, right? They were supposed to raise. I'd be very curious to see what the statements are going forward. Remember, the reason why they were holding off is because, oh my God, Putin could invade beyond. He's going to take over the Ukraine. He's going to stomp them out in 4 days, and then he's going to be on Poland's doorstep and all these other NATO. This is bad for Europe. Putin has been unable to capture any major city, and all we hear about is how it stalled, right? So technically everything that's bad that's holding back, we should start seeing some type of hawkish statements. The euro on Thursday could have some good potential, and it's at a 7:45 a.m. release. That's great for Eastern or US-based traders. Why? Because it's not at like 2, 3 o'clock in the morning. So that's wonderful. And then we have the biggie of the week. When I say the biggie, this is like my Trump impersonation. It is the biggest number, right? He's always about the biggest, greatest, fastest, strongest, right? The biggest number. CPI, month over month. Okay. Not only is it a positive number, positive meaning there's no negative next to it, it is accelerating faster than we were last month. And that's the forecast. And if you look at the forecasts, they've been kind of missing, right? It's been accelerating faster than what the forecast is. Thus far, the Fed has said, we're going to have to do 0.25 because Ukraine. Yeah, well, we're accelerating, and it's getting worse and worse and worse and worse. And just like with oil, they said that, this morning they said that people vote with their wallets. I know right now food costs are going crazy. Last time we saw that, inflation was not only getting worse, but it was broadening in other areas. We saw that people are not getting paid more. For a while, we were seeing people get paid more. Now people are not getting paid more, but the prices are getting even worse. And we haven't even seen shipping go crazy yet, right? Food costs are up, yeah. But now in the last week is when oil went absolutely insane. That is going to be passed down to transportation costs. So if you're unhappy with the way your food is now, and I can tell you right now, my wife, she's a master at Sam's Club. She messaged me, she's like, wow, X is normally $9, it's now $18. I was like, what? I was like, Yeah, well, it's getting worse. So that CPI number is very, very big, particularly because of gold. Right now, with the Fed being very, very dovish and saying, hey, listen, 0.25, Ukraine, we went from transitory inflation to Ukraine, right, with excuses. It's going to get worse. So again, gold has been a great long. Again, inflation typically when you're crushing inflation, gold is also not the best example, but the Fed is continuing to show inaction and basically dovish activity because they're so worried about the stock market. So I don't know, kind of interesting. Unemployment claim is going to keep low, and then not Rob Lowe, RBA Governor Lowe is speaking again. Rob Lowe is not a Fed president, but again, this is a banking panel, so this is probably a little bit more of a mover at 5:15 on Thursday, and then Friday we have data out of the CAD. Right, unemployment rate. Look at this, expected to drop down to 6.2 from 6.5. That's great. Employment change. They had a loss last time. Again, expected to be big here, and then University of Michigan consumer sentiment. So to end the week, I mean, we started off with basically nothing. Ending it with some pretty big numbers, particularly CPI. I think that's going to be the biggest one. And I'll tell you right now, the Biden administration is like, oh, there's an appointment. It's got to be a woman. Okay, they were going to, they were trying to put Bernard up there. Bernard was going to be a continuality of what we had. It was going to be not a big change. I can tell you right now, if they go in the same path that they're going, Bernard will not be the next the Fed chair. Okay, she will be tied into the Powell being just like him. Nobody's going to want him by this fall. Everybody's going to hate him. So yeah, I think this CPI, there's going to be a lot of responses, questions. Expect Bullard to have a lot of comments after this as well. Again, he's been nailing this like right on the. I mean, he's been hitting it on the head. Bostic is all over the place, but this CPI number expected to be bigger and getting worse. And that's month over month. That's not even including all the last couple of days of oil. Whew, that's going to be a big one. All right, and that's going to be on Thursday, March 10th at 8:30 in the morning. All right. And that's pretty much it. Saturday, nothing. Sunday, nothing. And then next week, we have monetary policy notes again when Australia is going to start raising. So, yeah, it's a very interesting landscape we're in right now. I'd love to say and focus on purely the economic releases, but the reality is over here. Ukraine says no longer insisting on NATO membership. Actually, not surprised by that one. Starting surrender. Some of the things are a little bit crazy. At this point, I'm not really surprised. Actually, the Ukraine, from anybody that I know that lives there, has family there, the Ukraine has actually become very, very anti-NATO. But yeah, at this point, they stood up on their own and done well. It seems like they're not necessarily interested in NATO anymore, so they're going to join the European Union and defend themselves. So interesting, but that's going to be a big one as well. Again, maybe that helps Putin. That was his thing. He never, his last thing was that he never wanted them to join a bloc. But I can't tell you the response thus far from people that I know over there is they're actually not big fans of the support that they've gotten, and they feel that they haven't really gotten as much support as they can. So, we'll see. I don't know. It's all speculation. So let's dive into the charts and kind of look to see where we're starting from. So right here, we're going to start off with the VIX. We're going to go into the indices first. So the VIX is negative. So again, everything should more or less be green. It was pretty bad yesterday. We had the open with a big push up, and in the overnight, we kind of pushed higher, and it was at a peak. We mentioned that, being up in this 3650 range. This is not a buy sell asset. There is not like a warehouse with VIX, in it. There's no supply of VIX. Right, VIX is a gauge, kind of an indicator of other things, of the volatility in the S&P, particularly in the options market. But it's quite high, and lack of any headlines, and even something like that they're not interested in NATO, that's a big hot button for Putin. We're starting to see it collapse very fast. Okay, and again, after such a large day yesterday, being up here, again, you see a large push one day, you tend to have a large push back the next day. So not necessarily surprised by this. What's interesting about this is we are seeing the VIX kind of open high and push lower. Everything's green as it should be. But we're seeing the dollar kind of stabilize, right? We're kind of seeing it stabilize. We drew this on Monday morning, right? We got a small little area of sellers up here. Now, the dollar index is actually something that is kind of a supply and demand thing. People will go towards dollar. People will sell dollar. There was a very interesting article that was written this morning. If any fans out there are crypto fans or cryptocurrency fans or have some knowledge of that market, is a very, very interesting article that talked about how basically what we've done with the dollar is we have weaponized the dollar, and this could be the absolute downfall of the dollar going forward. Okay, being the world's reserve currency, it is kind of the stopgap for instability. Well, now if you're going to weaponize it and use it as something to attack a country, there's no longer a need to hold it, which means the benefit of keeping it as your /war chest no longer is beneficial. Okay. That the United States dollar receives many, I don't know, it's kind of like it gets a lot of privileges that other nations wouldn't. Things like the amount of debt we run, the security rating. Well, if it's no longer the world currency, wow, we're in major trouble in the United States because our debt ratings, our bond ratings, everything will crash through the floor for the way that it's been handled. It's been coming for a while, I think. China has talked about the need to remove the dollar. Again, that's the next big push. China has said that we're going to attempt to remove it. Originally, when the euro was created, the word was that the euro was going to create, basically the next world currency because it was a whole bunch of nations working together. They've shown the flaws in the euro being that actual aspect of it. But right now, it's funny. You see the VIX dropping, the dollar is holding firm up here, and the dollar is very high. But now, all the people that said the dollar needs to be removed because of XYZ, now that we've used it as a weapon, yeah, it's a very, very interesting article if you guys want to look at it. You can go out there and just, search those terms, weaponizing the dollar. There's a lot of, think tanks that are talking about it. So, yeah, not much we can do with it this week. But again, VIX down 5%, the dollar's down 0.25. That's nothing. That's nothing. So again, we're starting to see a stabilization more or less in the dollar. And again, being very, very high on the curve. When I say high on the curve, I mean, you can see it. If I rotate it back, the dollar doesn't naturally get up this high. Okay, so we are already at a high point. We should already be looking at the dollar. Question is, with that CPI statement, are we going to get the push? Are they going to raise interest rates? Everybody knows we're going to raise interest rates, so a lot of this is already baked into this move. Once it comes, though, that could be where we see a quick push back down of the dollar. All right. Right now, with gas where it is and the equity curve, I'm not going to go too deep into it because it's pretty advanced. But a lot of the experts yesterday were saying, based off our yield curves and equity curves out there, we should be in a recession within 6 to 12 months is where we should be, based off of kind of what they're looking at, kind of the gauges going forward. Again, recessions are not necessarily the best thing for the dollar. So it's high, we're going to use it. So looking at the overall indices right now. So it was interesting. I'm going to drop this down to a 15-minute. We talked yesterday. We had a nice little 50% pullback that did not get entered, right? And again, I left that on there because I just want to show you guys. It was a supply zone. We talked about it. It was the Friday gap. If you'd used a 50% fib tool, you did not get into that trade. If you had run high to low, though, this morning, actually at 7:30 this morning, there was a fib trade. It did come back. It did grab that level of basing. It was an old area of buyers, that 42.43. Excuse me. It touched it. It dropped all the way down again. And then what happened is, we had this little kind of like 10:30 reversal where we popped back up again. We stopped. We halted. And you guys know about 10:30, right? 10:30 is right there. There's 10:30, right on that arrow. It's more or less the bottom. I mean, we had another one, 11:15, right? A little push up. It's like, wait a second. Why is it holding here? It was negative all morning from 7 o'clock down, right? This was the overall trend. What it is, this is a retail trader kind of bear trap, right? You see it break Globex highs, you're like, oh, or Globex lows. This was all super, super early. It didn't quite break the bottom, but we were breaking new lows. And people see that negativity and they're like, hey, listen, sell, 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 sell. 10:30 rolls around. And again, that's where a lot of profit taking happens from the opening trade setups. That was more or less the bottom. Had you gotten in, you got one little peak, and then it rallied back up. So we have now broken through that actual 50% retracement level. So had the early morning 7 o'clock traders gotten in, you were out. Had you traded it a second time, ooh, you're in that hopium range, right? You said, oh, listen, it was a 50. I'm going to short it right now because it's a 50% retracement. Ooh, I'm going to backstop it with 61.8. And it's gotten close and it's basing right now. And people are looking at this going, oh, God, what do I do? I'm short. I'm probably red in this trade a little bit. And again, they're looking at lunch and they're hoping that we suddenly get a big push. Now, with things like the VIX being down, it's down 5.7 or 5.9 right now. Seeing statements like this that are no longer in, again, this was a hot button for Putin. Again, that may actually help give us that afternoon push higher. Again, after yesterday, we were more or less due. So, looking at this on a 15-minute basis, starting this 9:30 candle right here, you can see that from 9 o'clock on, we did get a push up. It didn't quite get back into that sell zone. It didn't get up to the 50. It just continued to drop down again. So I would say zones that I'd watch out for. We know we have an area right below this that, again, it's been pushed. It's been there. Is it the ideal kind of place that we want to take a buy? Not really, but it is an area where we have had buyers come in right around 41.20. Okay. It's a little bit lower than where we need to go right now. Top side, I would say right now I'd be looking for this yellow zone. It's really kind of where they front ran that 50% retracement from the last big push down. That zone is going to come in right around 43.24. Again, it's the kind of the opposite of this one, right? 43.24.50. The last time we were there, sellers drove it down. And remember, if we drew the fibs up top from our last high to low, that was a 50% level that got front run. Okay, it got front run. Now, we know that this is kind of a precarious position. I also wanted to run this down and do it from the lows here. You can see that we do have a little bit of a level. And again, I think right now it makes sense why we're in the green. I think it makes sense that we go higher. The only concern that I have right now with staying long this one is we do have a pullback area right here, right? And anybody that knows, some basic fibs, right? If they're drawing from the last high to the closest low, that 50% comes in just on the other side of this area of sellers. Okay, so just like we saw the sellers come in here originally, that they got in before the 50% line was hit, there is another potential opportunity right here to take the short before the 50% outgoes jump in there and start trading it. And that's approximately around 42.63. NQ. So NQ is up. And I mentioned this one earlier today. I said, hey, listen, we got a little bit of level of basing right there. We had this old zone right here. We got this little Harry Potter trade out of it. It was an old area of buyers. It hit it, it hit it. 3 hits. Number 4 is when it breaks, and it did. It pulled down, pulled back, gave us an easy Harry Potter trade going high to low. That 50% was sitting in that same level. Now, you can see that 50% got sliced through. It didn't make it to the 61.8, but it's using that old level over here. These old buyers are now the old sellers, okay? Now, this one also had that same reversal at 10:30. It kind of hit the bottom, and again, this one was a little bit easier to draw, right? There was your bottom. 10:30 candle is right. Actually, I'm supposed to use the, hold on. I'm supposed to use the clock. 10:30 is right there. Magically, that is the green candle, pushed up, pulled back down, the level held, off to the races at 10:30 reversal. Now, again, parabolic move. There is positive news out there, and I think that positive news is great. We are bouncing off that 50, so there is going to be some, kind of selling pressure coming in right now. Could there be profit taking from this? Sure, absolutely. I'll tell you right now, people are probably pretty confused. They saw a break of a low of this 8:15 candle. They sold it here. All of a sudden, it was like, yes, yes, yes. Selling more, and then it went higher, like, oh god, and they got stopped out on the top side. So again, you had buyers coming in, you had sellers coming in, a lot of traps this morning. But I would say watch out. The NQ is actually more kind of set up for some type of profit taking / negativity in this range, and it's the same thing. The 50% got blew through. People are looking at this saying, hey, wait a second, I'm already short. I got a little bit of heat in this one. They're hoping for the exact opposite, right? They're hoping for the exact opposite, that Ukraine is, I don't know. Maybe they're looking. I don't know. I don't even know what they're. Again, this is a positive for the overall market for today, because this is one of Putin's big hot buttons. A ceasing of war operations would be something that's good. But you can see where we're at. And again, it's like, do you want to kind of call a top on this one? Say, be careful, right? Be a little cautious. Again, about 30 minutes, we're gonna have other buyers come back in. And again, this level right here, there's actually 2 little levels. There's the one that we just blew through, and again, that one didn't hit right at the 50. There's another one sitting right here. Whoops, not that. Sitting right above, right? Right there, there's another little level. So the question is, do the people that shorted at the 50, using the 61.8 as their backstop, if it bursts through, it's going to break their stop losses, but there is an area of sellers sitting right above it. So the question is, when we break through this level at 13,600, is that going to be the next trap for those fib traders? Again, reason why is it's just a very easy level to see on fibs. We know that we have some sellers sitting right above it. If it gets through, though, if it gets through the top side of this level, we got smooth sailing all the way back up top. So this is kind of the last bit, and I'm going to move on. 13,650, right? 13,649, really. If we can break through, we should have clear sailing all the way back up until the full retracement, and that would put us all the way back up here at 13,873. Okay. Now YM. YM looks very similar. And again, this was an old level that we looked at. And again, it kind of got front run over here and then kind of just chopped through. So we didn't really need it. I didn't take that off this morning. This morning, we were looking for kind of an overtake, and it looked the same thing. It pulled up. It didn't really get the entry again. It sliced forward. You can see the 50 did absolutely nothing. I mean, it didn't even slow down at the 50, again, from top to bottom. It sliced through this like a warm knife through butter, right? And it went through the 61.8 like butter. Didn't affect it at all. It's actually sitting up here around the 78.6 right now. There are some sellers, and it looks very similar to the NQ, right? Huge spike up. Now it's in an area of sellers at lunchtime. Kind of the same thing. We're slicing up, huge area right here. The way that these candles formed, there's definitely some sellers in here, because again, there's a lot. Here's a high. I mean, here's the top of a wick. Here's another one. Here's another one. Here's another one. Here's another one. So you have an area where there's sellers that are built up. Question is, with something like a NATO headline like that, a geopolitical event, technically that's exactly what Putin wanted. That should be good. I would wait till this one comes a little bit higher, and I'd say probably waiting for this to come up really back for almost a full retracement for me, coming back to those highs. I'd wait till about 31,510, 31,512, I think is a better area. But again, this is why I use fibs as confirmation, not as a first, because had you been taking this one and saying, hey, that's it, 50%, I'm doing it, there's my fib draw. This one, maybe you did well in this one. But again, if you took it the second time, yeah, it didn't work out so well. Um, it just sliced through like nothing. So it was only good for one hit today. Russell. So Russell is actually doing the best. And we marked this off kind of this old area talking about a bottom, a bottom, a bottom, a bottom. And then it's peeking out of both sides, peeking out of both sides. That was a takeoff point. This one didn't really have the reversal. And again, all signs right now look like, again, pretty good for Russell. Russell tends to be the first mover. I'd say most of the day that came in is probably this like 11:45. I guess 11:30, 11:45. And again, this one came in at 12:15, so a little bit after that one, right? So are they late are they late in reporting? Yeah, it could be. Could be. I would say I like Russell's chances to probably stay a bit higher. Reason why is because again, if we do any type of halt in the war, it means we can actually get back to true economic factors a bit faster. And again, that'll be kind of helping the Russell in it. So Russell wise, again, you guys can see where the 50 is. It is a level where the price had kind of pushed. Actually, this is a forecast level. So that's kind of what we're looking at right now. Let's see. Wouldn't be trading it off this one. It is interesting. I didn't realize that it was at the 50 for the top and bottom, but again, we got a new kind of trend over here, so you'd have to kind of move it. I I don't know that I'd like it here at the 50 for a reversal. It does match the NQ and the ES, but what I'm looking at right now, and again, this is not a zone, but I'm saying this is an area right here, right around the 61.8. You can see that we had some chop. It got front run here. It touched it here, and that was the reversal level. So that is going to definitely be on some of the radars out there. Would be the 61.8 level, right around 2015. So keep an eye on that level. 2015, I think, is a level we need to watch out for in the Russell. I have to follow that one up later. I have to put some alerts on that one. All right, switching across the currencies. So currency-wise, Aussie dollar. Aussie dollar, we were looking for levels down here at 72.82. It's black because it was a target. You can see that it hit here, and it was bouncing. It bounced, and it's kind of rolling through. We actually were looking for another Harry Potter trade just a little bit lower, and there's actually an alert set at 72.42. Hasn't hit that. It actually used that level, which is totally fine with me. I'm looking for a break of it. Knowing that it hit, it shows me that they've eaten more buyers out of that area. Totally good with that one. So I'm happy for that one. I'm going to leave that alert on there. Actually, let me bring this back to a 30 so we can see more data. There we go. I think that's good. Levels for this week. I mean, remember, we do have governor speaking later today. Making this one easy, top to bottom. You can see that the 50% just happens to be a level as well. There's a level sitting right there. So for you guys that are going to trade this in the currency world, I would say watch for 73.38. Again, 50% retracement from the most recent high to low, and there's an area of sellers, an area of supply sitting right in there. It is close to the 23 on the top side, but I'm not really as concerned about that one. I was more trying to see 50-wise where it was at, so let's pull that off. We're going to leave it right there now. So yeah, so that's what I'm looking for. A break of 72.42 to the downside, or looking for this one to pull back. If we could get all the way back up before he speaks tonight, that'd be awesome. That'd be perfect. But I don't know if we're going to get all the way back up there. How much does it have to move? 50 pips. Possible, but we're going to need some help from the dollar. Aussie yen. So Aussie yen, there was two potential levels down here. We had an alert set, and again, this first one was a 50% pullback. You can see it had a lot of issues, right? It kind of hit it and popped, and then started just going back and forth and kind of playing between these two levels, right? And then we hit the level again. So I would say right now, this one has been difficult, okay? We're seeing a lot of yen strength and dollar strength, but we're also seeing gold strength at the same time. It's made this one a little bit more challenging to play because, again, typically when gold moves, Aussie moves. They're decoupled slightly right now, and I'm curious to see when it will recouple again. Looking for potential areas, you can see there is an area, a small zone right around the 50. It's kind of sitting right in here in the upper reaches of this. Again, those of you that use the 50-61-8, it's kind of in your wheelhouse for that. But for the most part, and again, this was not a bad little buy right there, right? I see the next real big one is going to be kind of probably down below. Let me clear some of these off real quick. Actually, let me pull this. What time is he speaking? 5:15, right? Yeah, 5:15. That's going to be right there. Okay. If we can pull back down to that level, that could be a potential buy area as well. Again, a news-based move mentioning that again the Aussie is going to start raising interest rates or start to control inflation. That should give us a pop in the after hours. So yeah, there's a potential sitting there, and that would look. Whoops, not long, not short, long. 1 to 3 is right there. So you can see the first one is already out. There may be another opportunity with news later on today. So watch that one. Euro pound. Um, let's see. Euro pound right now is a little interesting. So it's spiking the way that it should, right? You guys can see. Look at this level. It's just basing. All this, it's going back and forth. So I got to leave that on there. Um, Obviously, the news of them not wanting to join NATO is good because again, that is kind of a cessation of war activities. Um, Fortunately for this one, I just don't really like any of these levels in here. I really think I'm waiting until 84 gets back up top, and I know that's not what everybody wants to hear because it's a little, it's about 60 pips away. I do like the bottom. I think this is a decent bottom down here. I'm okay with that level, so we can mark that one off. Let's see. You can see how long it's been. 82 is put it this way, 82 is very, very low. This one typically likes to stay between the 83 and 86 range. So 82 is very, very low. Let's see what some of the other forecasts are looking at. Yeah, look at this. It hit it here the first time, pulled back a little bit, and then boom, blasted it. So it's looking for sellers up top. Yeah, I mean, I wouldn't say there's any great setups this week for this one. Again, use this for a proxy. Use it for a gauge of whether or not you should be long or short euro dollar, pound dollar, and just kind of see who's the strongest. Right now, euro is winning that battle without a doubt. It is fighting back, and again, making comments about NATO, exactly what you want to do. Euro yen. So euro yen's an interesting situation. We knew we had a small level here. Again, we got that short. We're already out. It hit it. A kind of a second time and started the base in that level. You can see it peaked up, peaked down, and now it's trying to form higher. We're in a racetrack, so we really don't have a lot of sellers or anything coming into this one up until the level here around 72.11. Now this is kind of the same drawing, right? We've drawn this on a couple of them. There is a level there. This is taking it from kind of this high to low, and again, the 50% just happens to pop around where you have an area of sellers. Again, a punch down, a kind of base a little bit, and then boom, avalanche, right? That's going to be approximately around 127.35, right? 127.35, right there. And again, 50% retracement from the last kind of peak, when it formed the new trend. You could have done it from here as well, but I'm just going to keep it kind of consistent from the big drop. So we know we got a level up top. Some people may be drawing this one from here as well because, again, we kind of established a new trend. Let's see, from here to here. Yeah, it's kind of in no man's land, and there's nothing really decent on that one. So I'm not as worried about that draw. So we'll see. Right now, though, I would say that I would be, bullish euro. Seeing the same pop, and again, we know why. Not joining NATO is a great thing. It's funny that people would say that. This is one we've talked about a couple times this week, right? The two black lines for you that were not in attendance on Monday. This is actually coming from actually, I think it was a daily, right? It's a daily zone, daily or 4 hour. It's a very large higher time frame. It's a great level. We were unable to get into there. So as much as I was like, hey, listen, we got a short, you got a short. Euro's in a bad spot. Very hard to short into an area of buyers like this. So again, is it going crazy? Is it a crazy long? Not really. But again, it's starting to gain ground back. Hearing the news today about, Ukraine is not dead set on joining NATO anymore. Like I said, they're getting a little bit of help, but right now it's more of like a local thing. And, the Ukraine is not the happiest with NATO at this point. So I'd say, again, I think you stay bullish this one, particularly because, remember, this is why I looked at the Dixie. I know that this is starting to rally back. I know that there's not a lot of sellers in here. Looking at the dollar index with it, again, what is the dollar index doing? Run into sellers, run into sellers, run into sellers, run into sellers, run into sellers. And these buyers are only going to last so long. This is extremely high. Okay. Looking at this dollar weakness coming in, this only helps further this to the top side. So I think that we have this most likely coming back up in at least into the 110 range. Again, 109.37. We got about 70 pips to go. Pound yen. Whoops, I didn't want to move that. The pound yen is asleep. Okay. Too much fish and chips. You can see that right now the pound yen is really, I mean, it's an 80 pip range. It's up 60 right now, but it's only 0.4. So it's really kind of slowed down a little bit. We know that we've had buyers down here, and so far those buyers haven't been able to support. We've really kind of locked ourselves into this kind of sideways channel. Seeing everything with, hearing comments, again, hearing the comments we have, I would say that the euro stands to benefit more than the pound does, but eventually the pound will be able to benefit it from it as well. I think the big question with this right now is, right now I would say the yen is probably more controlling this pair, and a lot of that has to do with the overall indices. Being Tuesday, we got 2 days to go until CPI. I feel that this one is going to have, if you're looking at playing something that's a little bit not foreign, but something that's not just strictly the dollar, the yen is a proxy for the stock market, the U.S. stock market, for the Dow in particular. So I'd say right now, I think that you look for long opportunities. It is kind of lower in the curve. Do I have a great setup? Not really. Would I be interested in taking it off of the same level? No, it's hit it way too many times. I don't really have anything clean till much lower. But, and I say but, there are definitely buyers sitting in here. If there weren't, price never would have stopped here, right? If there were no buyers here, price never would have stopped here. And when you look at the actual candle formation themselves, looking at this, buyers here, buyers here, buyers here. It's kind of like a new level that they've established right there of buyers. So not necessarily the best. And again, kind of the same thing here and then lower and then lower, 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 lower. You kind of have sellers stacked up here, right? So, and we had this, this, and this with all of this right on the other side of it, right? And that's, whoops, right before here, right? So I would say if you're looking for some type of if then that base trade, I would say look for a break of here. There's going to be a quick little kind of support and resistance trap on that one. But if we're able to break through, there is a racetrack. And I don't know what the basing level is going to look like. If I had to just kind of guesstimate of what it would be, probably something along those lines. And your 1 to 3 is only sitting right there. So I mean, you got plenty of room, right? You got plenty of room in this one. Somewhere in. I'm just guesstimating. I have to see what the basing looks like, but that would be a break of approximately 152.23. Going into the pound dollar. So the pound dollar also asleep, right? Also asleep. I would love to say that this has been a great trade, but I mean this one is 45 pips, right? We're in the 45 pip range. What's interesting right now is we are seeing the euro pound go up, as we should. Again, this is justified based off that NATO comment, right? We're seeing that the euro dollar is now up 73. You're seeing that there's the pound dollar is not really doing much, right? We're seeing dollar weakness roll in kind of across the board. So we're seeing the Dixie starting to collapse even more, right? It's accelerating. And what do we see on the other side? We're seeing the euro dollar also taking off. Okay, which means that the pound dollar holding firm, it's an area of weakness, right? It's kind of weak versus weak. So we need one of the two to start kind of breaking out. I would say that again, I'm probably more leaning towards the top side. Again, the European currency would be the first mover, the second mover would be the pound. And if we're going to see dollar weakness, this is just basically you're going to be the lagger. But the best way to play it would be the euro dollar right now. Now, dollar CAD. So dollar CAD. Dollar CAD is up at levels where we're kind of looking for, we have alerts up here. We're looking for 29 to be broken. We're getting super, super close to it. With it pushing super high, kind of things I'm looking for this one. I'm looking to see what the API number is today, right? Oil is really, really high, right? Oil is up. Well, I guess it's only 122. Excuse me. So oil is pulling back a little bit, but we're not seeing it inside of the in the dollar CAD chart. I think the dollar CAD does recouple. We're starting to see dollar weakness go in. If the CAD recouples to oil's recent price action going up to 122, Couple that with the dollar weakness that we're seeing, because again, maybe war is going to be over soon and we don't need all this, and we can start focusing on and crushing inflation again. We could see this turn and roll very, very fast. I think right now on larger time frames using these zones, we have 129.30 as our sell area. We have an alert coming in at 129.08. Again, I'm looking more to get short the dollar CAD than anything else. Okay. Um, Again, we had this nice little draw before back down to the 50. Let me see, where is it now? Right now, it's kind of in like a no man's land. I'm not super concerned with it. I'm more looking for price to come up in this level to see if we can kind of have it come across this yellow line. Um, yeah, right now it's like I said, I would like this to push just a bit higher. I'd really like to get in a bit higher and then take this back down, particularly with the oil in the next 2 days. Okay. Looking at dollar Swiss. So dollar Swiss, talk about a very, very choppy kind of break-even based trade. All right. I always hate when you see educators are like, "Oh my God, I'm right 100% of the time. I'm never wrong." It's like, come on, okay, right? Nobody really knows at the end of the day who's what the market is going to do. It's its own animal, right? We ended up hitting our entry, and it came down, and it got to about, let's see, it got 1 to 2, right? Risking one to make two. Our original goal in this one was 1 to 3, right? It went down, it went lower, it went lower, it went up, it kind of hit the level again, and then kind of dropped to the same area again. This is one of those situations where most likely you got stopped out of break even. If you didn't, you probably banked a little bit on there. But again, the telltale sign on this one is when it gets turned at the same place again, it pushed up, pushed back down again. You're not holding this trade still, right? You just can't. So right now, the dollar Swiss has been able to drive a little bit higher, but, and I say but, right? We can take this off now. This one doesn't matter. This zone is kind of chopped through, so we're going to remove that as well. I'm going to actually do some new draws on this one. We're going to pull one from here and go up. And again, we know that we had a level sitting here. That's kind of what we're running into right now. Look where this old target kind of was. This provides an interesting spot. Because again, if this is our top when we pull back down again, the 50% retracement is what people are going to be looking for, which also happens to coincide the last time we had a pullback. Remember, this pullback happened before the rest of this 50% was actually even drawn. So not necessarily coincidence they're in the same area. So I would say, again, downside target would be down here at 92.41, but look for a potential reversal at that same level, maybe later in the week. And again, maybe, let's see, how many pips is it? It's 40 pips. This could be actually a potential for Thursday. What I mean by that is Thursday would be, today's Wednesday, it would be right over here, right here. If price is able to punch its way down here and grind its way down, doing like one of these, like slow, 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 if we're at a 50% reversal at the time of the CPI right there, that could be a great opportunity to go long, right? Again, CPI comes in super hot. That'd be a lot of strength in the dollar very, very fast because people are like, oh my God, maybe they are going to go 0.5. That could be a nice little play for later on the week. So yeah, watch out for that one. Dollar yen. So dollar yen. Again, there's one, there's two, there's three, and again, it based in there and it broke through on its fourth attempt. Used it. We were looking for 115.86. We didn't quite get up there. It used this small little level. Right now, I don't even think. I mean, this was just. Oops. It's so choppy right now. I'm just not a huge fan of the dollar yen right now. I know some people love it, but near the 50, there is a level sitting right here. Right. So again, for those of you that like 50% retracement levels, again, bottom to top, there is, I could say there's demand there, right? It stopped it here and then it tested it to confirm that there is a demand level there. So, again, not everybody loves the dollar yen. It's not on my favorite list right now. I just think it's very difficult to play. I think there are cleaner opportunities out there, but again, 115, 25, it's a 50% retracement from low to high. And again, an area of confirmed demand sitting in there. With currencies, and again, I'm going to close on commodities day because I think that's probably the most important. We are seeing, again, today is a positive day, right? It is positive. The VIX is down. And again, now that we're like, we don't need our NATO, you know what? We don't need NATO. We don't need them, right? Markets are all doing great. It is risk back on. We're seeing crypto in a great place. You're seeing Bitcoin up 2.73. It hasn't really left this area. It's not able right now to currently break above 40,000. Biden is signing an executive order to basically create a regulatory environment for cryptos. That article I mentioned earlier today also mentions cryptos, and a lot of people will say, well, yeah, world currency, Bitcoin. They actually mentioned that no, that wouldn't be it either. There's a lot of problems with that also, particularly now, because remember, you're locking down, Coinbase, I believe, is now shut off cryptos from Russia. It's like, wait a second, I thought there was no regulatory environment from it, but you're cutting people off. Then that's the exact opposite of what you designed it for. So it's got its own issues right now. But again, risk on means these are going up. Again, Ethereum, Bitcoin, all of them. Ethereum is actually up 4% today. Even Dogecoin is up, 0.75%. So again, shows us we're not necessarily trading these at Nadex, but we're showing that it is a risk on type scenario. Money is flowing back into cryptos. And again, the dollar's, again, poised for a little bit of a drop. Now, oil. So oil is pulled back. We were really kind of looking for the top, and it ended up punching just a little bit through. And, Todd and I mentioned this earlier today. We said that what we were looking for, there's a trade from earlier in the week. Actually, at this point, I'll probably reverse it. Yeah, I'll reverse it. We mentioned today was going to be a good opportunity to short. The reason why is because people see that headline, but they didn't really quite understand how much oil we really, really have. That statement was made right here, and again, it's not lost on me that the time that it reversed, there's 10:30. Okay, I mentioned today people are going to read that headline and be like, "Oh my God, oil! Biden just said oil is going to go higher. We're not taking their oil, right?" And it was the perfect. It was the perfect trap. The market opened today, right? 9:30 is right here. So again, a little bit of a spike from the futures market, and then boom, look at this. Retail traders are like, "Oh, yeah, that's it. It's going higher." They got in and they were like, "Yes, look at that. There was our old high. We broke through it. Support and resistance, baby. I know that as soon as it goes above, I need to buy, 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 buy." And within a half hour, not only did it collapse, it retested that top level. It collapsed even further. We went from 129.40 down to 119.63 in basically an hour. So yeah, we knew that was going to be a data short, just because again the reality is the 90,000 is not really that big of a deal. We knew that allies weren't going to be able to cut it off. It was nice that they said we're going to get rid of 2/3 of it, but again, saying that you're going to do it and having an actual plan, feel that those are two different things. But again, great shorting opportunity today. Hopefully, you guys were able to take advantage of it. With it where it is right now, and again, it came down and it sliced through the 50 like nothing. It blew through the 61.8. It's back in an area. This 120 is a level that we talked about. We're kind of slicing through it right now. I don't know that we're going to get all the way back down to the 116 level. We do have OPEC talking with the shale people out there, so how to increase supply. Any comments like that should drop it down. What I would say is right now, a lot of the volatility has probably happened. We had a parabolic move up, a lot of fear in there, a lot of push back down again, and this happened at 8. This is all that one Biden comment, right? Everybody sees it. The retail trader reacts to it. They lose all their money on it, and now we're back to exactly where we started at 8 o'clock this morning. Look for that API statement. I do believe there will be some maneuvering with the API statement going forward, particularly in the European session today. So I don't know what the forecast is going to be for API. I don't know what the oil inventory tomorrow is. But what I do know is with API today, crude oil inventory is expected to be down 1.1. That gives a potential for some trade setups tomorrow. And what it's done now is it's given us a kind of a top and a bottom of where we have sellers and buyers, right? So we're kind of boxed in on two sides and we're floating right around the 50. So again, boxes are off on your charts and look at them. Natural gas. So natural gas is taking more of a slide. Again, we sliced through we smashed through the 50. The 61.8 provided a little bit of resistance, and it actually just pulled back. You guys can see that it ended up creating a zone right before the 60, the 61.8, and then used that as a short. I think absolutely right now, natural gas is a short. Again, Maryland was 77 degrees yesterday. We are having a little bit of a hot streak going on right now. Seasonally, it's also starting to turn against natural gas. And then Europe saying, hey, listen, we're going to try to figure out how to get rid of 65% of the natural gas we're getting from Russia. Also one of those things like, okay. They're trying to find other methods to get around natural gas. So again, fundamentally, not necessarily what natural gas producers want to hear. I would say very caution, use caution. The inventory report for this one comes in on Thursday, but I am definitely more bearish natural gas. Now, gold is spiking. It is pulling back a little bit. And again, this is the 9:30 spike, and then this one actually turned around at 11. I'm just trying to track this one forward. For right now, I'm trying to figure out places to get short gold. I think Thursday is actually going to be the day to find, to get short. in that article I mentioned, they're talking about, well, is gold going to be the currency? Are people going to use gold? The answer is gold is not the solution either. It's kind of they even mentioned it and they said that it's already a busy trade. That's already a kind of a packed trade, so not the best. Gold is not going to become the world currency. So you know, with the dollar starting to falter a little bit, again, a lot of this is going to come into CPI. So, right now, looking at this, doing the kind of the low to high right now, the 50% is right around 1975. That was a gap. We have kind of tested it already a little bit. Um, I'd say right now for me, the biggest thing is I'm looking for this to kind of come down and stabilize and then push lower. I think getting short gold before Thursday is probably a decent thing to try. Again, they're going to start raising interest rates, and that is a negative environment for gold. Again, anytime there's these big pops, I think there's an opportunity to start getting short. So, again, is that going to be the top 2000, 69? Is that the top? Probably not. I think with another nasty headline, I think it has the ability to pop through it. So, again, look for pops, take those drops. Silver, it looks exactly the same, right? Retail traders stepped in. By the way, it was literally just chopping back and forth through this 26 level. Again, that was a short over here. This big spike candle, 930, retail trap, boom, boom, yes. Oh no, didn't go as high, and then boom, collapsed back down because you know profit taking, and we're back to where we started. The market opened here. We're actually just a little bit down from where we started. It's higher than where we closed yesterday, but in the overnight is where most of this move happened. Also, if you want to go low to high on this one, I guess we can do it from here. Well, let's remove the second one. You can see we're sitting right around the 50. And look at all the basing, right? All this basing just happens to coincide with 50 and that level that we talked about earlier in the week, right? That same level in here. So watch silver again. I think again, any type of big pop, look for a shorting opportunity in silver. Also think that silver on Thursday is probably a decent short, but I want to see what price action does before I start commenting. For the CPI reading. So with that, that is everything for today. Again, make sure you mark your calendars for March 15th, next Tuesday at 12. With everything going on right now, though, you can't just log in once a week. Definitely check us out on YouTube, 8:45 to 9 a.m. Eastern Time, Monday through Friday. We kind of cover what's hot, particularly in the markets in the European session, and where potential trade setups are. With everything going on geopolitical wise, again, hearing that NATO comment that we're not dead set on having to join NATO anymore. That's kind of a big headline. And again, the market should react accordingly to it. I'm sure Putin is probably all over that comment. Um, we'll see. Hopefully, it provides positivity to the rest of today. We can get the markets kind of slowing down a little bit, and I don't know if we can get something along the lines of a ceasefire of some sort that Putin's like, yes, I negotiated that, and they're finally listening to me. There could be some big pops in the market. But again, big pops tend to be, great shorting opportunities as well. So with that said, I'm out of here. If you guys have any questions, you're more than welcome to email me, support at keeptradingsimple.com. Thank you for joining today, and I'll catch you guys tomorrow or next week. Have a good trading week. Take care.